Straight into the latest business news then on the programme. We're starting, in fact, with the trade deal, of course, signed between the United States and China. And our business editor, Stephen Carroll, is with us here on set. It's got all the details, Stephen.
Stuart, it's a deal that commits China to buying more US goods and reduces some of the tariffs that the US has imposed on Chinese imports. The deal offers some relief for global markets, but leaves in place tariffs on hundreds of billions of dollars worth of Chinese goods. Now, the 86-page document also includes stricter rules on protecting intellectual property, but doesn't address some of the biggest sources of conflict between the two countries. The Chinese Vice Premier, Liu He, has since told state media that supply and demand will dictate China's purchases of farm goods from the United States. Those commitments being hailed by President Trump as a victory after 18 months of a trade war between the world's two largest economies.
This is something that's going to be so special, however, to our manufacturers, our farmers, our bankers, our service people. Nobody's ever seen anything like it.
This is a mutually beneficial win-win agreement. It will bring about stable economic growth, promote world peace and prosperity, and is in the interests of the producers, consumers and investors in both countries.
Meanwhile, China's largest utility company, State Grid, is preparing for a sharp fall in economic growth there, according to reports. The Financial Times says that internal forecasts at the state-owned monopoly show it's bracing for growth to fall as low as 4% in the next 5 years. It's currently hovering around 6%. China will publish its official growth figures for 2019 tomorrow. On the stock markets, a fairly flat open in European trading today. Paris and London starting the day pretty much close to that zero line. London slightly in the red, Paris slightly up. Gains in Frankfurt, though, of around 0.25%. No clear reaction on the European markets to the trade deal. Similar picture in Asia, and that's, of course, because a lot of these details had been released in advance. We knew the deal was coming. Investors looking more into the detail of things like the commitments in this deal perhaps not being followed and what might ensue from that. This is the picture on the Asian markets. Pretty flat in Tokyo, gains in Hong Kong, but falls in Shanghai. Now, Argentina's inflation rate has hit its highest level in almost 3 decades. Prices have spiralled as the country faced a deep currency crash and recession in the past 18 months. Medicines and the cost of communications saw the biggest increases last year. The government needs to solve its debt crisis to help bring down inflation, as Solange Mougin reports.
Fruits and vegetables that cost a whole lot more this year than they did last year, not to mention medicine and manufactured goods. The inflation rate in Argentina jumped by almost 54% in 2019. The year before that, it rose 48%. For the past 15 years, inflation has been in the double digits, and most of that time above 20%. For Argentines, it's something they've gotten used to. But poverty has soared.
We're used to these ups and downs. This is just one more sway that we have to adapt to.
It's bad. You lose purchasing power. Every time you buy less.
The inflation rate in Argentina is one of the 5th worst in the world, second only in Latin America to Venezuela, and it keeps going up. But its levels, though, are far from the record-breaking inflation of 3,000% during the 1989 crisis. But a dangerous cycle continues, analysts say.
Sectors adjust their profit margin based on what they believe they earn compared to other sectors and not with respect to their costs. And therefore, there is this constant belief that the state will be an arbitrator in these types of situations.
To bring down inflation, Argentina's new president, Alberto Fernandez, needs to renegotiate the country's debts. He set a deadline for the end of March for a deal. A deep recession and failed promises to curb inflation were decisive in knocking former President Mauricio Macri from office in elections last fall.
Sales of the French carmaker PSA plunged by 10% in 2019, mainly due to a slump in the Chinese market. PSA owns the Peugeot, Citroën and Opel brands. It sold just under 3.5 million cars globally last year. China saw the biggest fall, down 50%, while sales in Europe dropped by just over 2%. This disappointing year comes after 5 years of increased sales for the PSA group. And finally, for me, he may be serving a life sentence in prison, but the El Chapo brand is apparently still worth something. The Mexican drug lord now has his own beer called Chapo 701. It was launched by his daughter Alejandrina, who runs a fashion and lifestyle company built around her father's brand. The 701 is a reference to the ranking that Guzman reached in the Forbes magazine Rich List in 2009. He was sentenced in the US last year for charges of trafficking cocaine into the US over a period of 25 years. I do wonder if this beer perhaps is a little bit tasteless.
Exactly. Very strange. She's doing quite well out of it. Thank you very much, Stephen Carroll on France 24. Papers now.